Did the Fed change its tone too much over the last couple of months?
I think the Fed has struggled to get on the right message, and you saw a little bit of that in the last few months. Partly it's because they're debating where they're going, what the rate will be eventually, what the balance sheet will be eventually. So maybe they've gotten a little too flexible, but I think they'll be adjusting this, the remainder of this year, the next few meetings.
How do you think that they are reading inflation right now, John? I mean, the wage gains were pretty moderate, and overall, you know, we've seen this sort of moderation in commodity prices, but we're still in a pretty hot economy.
It's a good economy. These employment numbers are great. I think 2018 will be the strongest year in this whole recovery. I think some of the actions on the tax reform and the regulatory reform are paying off, and for that matter, some of the Fed normalization is paid off. But the inflation rate is good right now. It's not picking up. That's a good sign. So, but the Fed still has to think about normalizing its rate, and that's what they had planned to do. I think they'll continue to do it this year, but take into account the markets more than they had before this time.
John, when you consider that relative economic strength, also the fact that the stock market is stabilized, do you think the president should only settle his trade dispute with China for a full and frank deal rather than just settling for something in the middle ground?
I think it's important to get a deal. I think there's some things that the Chinese ought to be doing. We've mentioned those things, whether it's tariffs, whether it's investment restrictions. So I think there's a chance there's going to be something good. It obviously can't be superficial. People will see through that right away. But I think it's a good sign. Actually, it kind of builds on other things like the revision of NAFTA, stuff with Europe. So we get this stuff with China settled, I think it'll be good for the economy. But we're not quite there yet, obviously.
So what's the prognosis for 2019? Some people think we're going to slow just a little bit in the U.S., and some people are looking at consumer confidence and some other forward-looking indicators, not to mention the market turbulence last year, and wondering if we're going to slow pretty substantially.
Yeah, I'm of the view that we wouldn't get that much of a slowdown. I think the changes in policy that were put in place, they're more longer lasting, not going to last forever, of course. But I think 2018 was good. 2019 might not be as good because 2018 was so good after all. But I think that a lot of the things are in place. People, of course, worry when the expansion gets to be so long. But as they always say, as economists always say, expansions don't die of old age. And there's still some good things in the works. And I get this trade stuff settled out. I tend to be still worried about the deficit and the debt. So I hope they can address that to some extent. But right now, the biggest uncertainty is the trade and also how the Fed is going to adjust the rest of this year.
Do you feel particularly, John, given where some of the other central banks are, still negative territory is my point, that the neutral rate or the essential rate where they should just stand in the meantime is much lower than it was a decade or so ago?
Oh, I think the Fed has done a lot of work on this. John Williams, president of the New York Fed, has done quite a bit. They basically kind of reduced their estimate of the so-called real neutral rate, R-star they call it, from 2 to maybe about 1. And so that means that the nominal rate would be 3 rather than 4. That's where they were aiming. I think they're continuing to aim in that direction. So yes, the best consensus is it's down a little bit. But the rates, negative rates, the rest around the world are still negative. And I think there needs to be global normalization, global normalization. The Fed is part of that, ECB is part of that, the Bank of Japan is part of that. I think we'll have a more stable economic system globally and in the U.S. if we get to that normalized position before too long.
Hey, John, there's still some vacancies on the Fed. Your name always comes up when it comes to Fed vacancies. Have you had any conversations with the administration? You think someone like Herman Cain, whose name has been floated out there and reportedly, according to our own Eamon Javers, is being spoken to, would be a good addition?
You know, I hear so many comments about interviews and people talking in the White House. I think it's important to fill out this Fed at this point. They're a little short. People are busy. It would be clear to do it. So just go ahead. There's actually been people nominated, but I don't know the particular individuals at this point. But some experience with monetary policy is important at this point. Know how the markets work, know how economists work at the Fed. Models, I think, and rules is very important. So people who have that experience is really the ones to be looking at.
says the father of the Taylor rule.